All right, so we have corn under a little bit of pressure this week. We're kind of hanging around that 480 for July. Still looking at that old crop here because you know what? Some farmers have a good little chunk left to do. So really, what are you guys holding on here for? It doesn't look like the weather is going to be getting crazy here. So you have like this extended forecast pointing to wide open planting window once this current wet pattern clears out. You're hearing this chatter, 96 million acres. I've been in the camp at 90, closer to 97. But, this 96 million acres is getting louder. On top of that, recent rains in Brazil, Safrahana belt prompted Dr. Cordonier to bump up his production forecast to 125 million metric tons, just shy of the USDA's 126. But the timing is critical. With pollination now underway and the wet season looking like it might stretch into early May, Argentina also seeing better than expected early yields, leading to a 1 million ton boost there as well. U.S. corn is the cheapest in the world right now, with heavy competition is coming once Brazil begins harvest in June. Add that to a slight dip in ethanol production and stocks. This estimated this week. We'll see that number here later today. So the tone kind of stays heavy here, especially, you don't, whatever we have with China coming over with these deals, they're not coming after our corn as much as some of the beans and wheat that you would think could lead. So Trump softening the tone with this China has helped lift broader market risk sentiment overnight. Equity markets are tearing it up here, almost up 3%. Still, oil's, oil is ticking a little bit lower here. Dollar firmed up a little bit, but with May option expiration this week and lack of any bullish weather threat yet, corn could remain under pressure into next week. Key technical support still sits at that 477, so we're just a little bit above that. And then below at 471, we're talking the July contract. All right, now let's move to beans here. The complex is catching a bid this morning with Trump's promise to be very nice to China in trade talks, even though Xi and Trump haven't spoken directly since he took office here. But a hint at that tariffs could be reduced is giving bulls something to work with this morning. China is back in the market, reportedly booking 8 cargoes of Brazilian beans and preparing to release over 600,000 tons from reserves. I have more on this on my newsletter, so be sure to subscribe to that. But this is, let's see. Technically, though, July beans are flirting with that 200-day moving average once again, a level they've only closed above once since December. So a break over 1059 could invite some more momentum buying. And wheat, on the other hand, is starting off softer. Rainfall is on the way for the dry southern plains. That's helping ease some of the recent weather concerns. Global supply stories like dryness in China and the Black Sea haven't turned threatening yet. And while the U.S. hard red wheat stocks are rising, managed money remains heavily short, which could be a fuel for a bounce down the road. But, that's just not happening today. So we're kind of watching that 32.5 on July Chicago wheat as the next key support.